Stocks continue to act with great volatility heading into the month of October. Although the exact reason behind this rocky start to the month isn't altogether clear, it can probably be attributed to a couple of headwinds, such as the uncertainty created by the upcoming presidential election, the lack of movement in Congress on other stimulus bills, the historical weakness of stocks in the fall in general, along with a continual healthy dose of profit taking. This market-wide pullback isn't all bad news, however. For investors with a long-term outlook, sizable dips in the market can create tremendous buying opportunities. In this video, I'll discuss 3 different dividend stocks that can be purchased in October 2020, which are still undervalued and present great opportunities for gaining large profits and building up sizable dividend income along the way. Get ready. You are now entering the Academy. For the first stock, we have Walgreens, ticker symbol WBA. Despite almost a 40% decline in Walgreens stock since the beginning of the year, at the current price of $35 per share, Walgreens has a significant upside. Why is that? The key is Walgreens stock is still 47% lower than it was at the beginning of 2018. Some of this decline over the last 2 years is justified by the roughly 17% decline seen in Walgreens' net income margin from 3.5% in 2017 to 2.9% in 2019. However, earnings growth on a per-share basis was higher by 14%, driven by revenue growth of 16% and massive share buybacks. Specifically, the company has invested about $15 billion in repurchases since 2017, resulting in about 14% lower outstanding shares. For the 9-month period ending in May 2020, the company spent another $1.4 billion in share repurchases. While there was a decline in margins, revenue and EPS growth were strong. So what explains the drop in stock price? It was primarily the company's PE ratio. Walgreens' PE ratio plummeted from about 17x trailing earnings at the end of 2017 to 13x in 2019. This can partly be attributed to lower margins as well as the company's international retail business facing tough competition from online retailers. While Walgreens' PE ratio is down to about 8x now, given the volatility of the current situation, there is a significant additional upside for Walgreens' multiple when compared to levels seen in the past years. PEs of 17x at the end of 2017 and 13x as recently as in late 2019. Bottom line is that the company's massive buybacks and an attractive valuation of just 7.5x expected 2020 earnings could result in a significant upside for the stock. And with a healthy dividend yield of 5.3%, this makes Walgreens a no-brainer for any savvy investor's stock portfolio. The second stock is WYNN Resorts, ticker symbol WYNN. Casino stocks were among the hardest hit when COVID-19 hit the US, and there hasn't been the same swift recovery we've seen in other sectors. But the gambling industry may not be as hard hit as you might think. It's not like cruise lines where ships are docked without customers. This isn't even the hotel industry where businesses and leisure travel has been dropped to a standstill. Resorts in Las Vegas and across the country can still rely on gamblers coming into play for a few hands of blackjack or sit at a slot machine for revenue. And that will keep them afloat until a full economic recovery kicks in. When it does, WYNN Resorts could crush the market. Resorts and casinos in Las Vegas shut down when COVID-19 hit in March, but started to open for business at the end of June, and customers have flooded back in more quickly than expected. In July, gambling revenue was just down about 39.2%, following a 61.4% drop in June. Clearly, customers are coming back, and there seems to be momentum building. Early indicators are that travelers are slowly coming back, with hotel occupancy hovering around 35% last quarter and room rates down significantly across the Las Vegas Strip. But if casinos are still busy, it shows that revenue is still flowing in. And when travel picks up, we will likely see a quick recovery. The new upside for 2020 is online gambling, and that's where the stocks like WYNN Resorts has the most upside. Online gambling is simply a product extension for these companies, and there's almost no risk to them financially. But for now, only Caesars and MGM have a sort of online offering. We don't know how big the online gambling business will be long term, but investors buying casino stocks stocks today are getting a good foundation with existing resorts and adding in pure upside for online gambling. Long term, the earning potential for casino stocks hasn't changed at all. Resorts in the US and Macau still have restricted supply, so as demand returns, so will earnings. Not only is there an upside for regular casino operations, but the online gambling business could be a bonus for shareholders. If it takes off across the US, stocks like WYNN Resorts could be growth stocks for years to come. The value investors are getting today is worth the bet in casino stocks. The final stock is Nordstrom, ticker symbol JWN. Nordstrom is a luxury department store based in the US. Nordstrom and its competitors have all seen drastic decreases to their stock prices in 2020. Without a doubt, department stores in general have been heavily impacted by the pandemic. Many have already filed for bankruptcy. Others are still at risk, and from the current stance on Wall Street, many think Nordstrom is on the brink. JWN has fallen more than 70% since its highs earlier this year. JWN shares currently sit at a price comparable to that of 2008. Nordstrom has been bottom line profitable for the last 4 years. The company has demonstrated consistent net income and total revenue with no major increases or decreases aside from this year. Over the last 2 quarters this year, the company has seen a significant decrease in overall revenue, falling to less than half of what was produced in the fourth quarter of 2019. The company has gone from consistent profitability to sliding into the red at the bottom line over the last 6 months. Although it is widely known that most companies in the department store and retail sectors are priced for bankruptcy, there will undoubtedly be a few companies that pivot, survive, and recover from current outrageously low share prices. From the view on Main Street, Nordstrom has everything it should require to make a strong comeback. The company caters mostly to higher-end spenders, a demographic likely to be least affected financially by the pandemic and shutdowns. Further, and this is where Nordstrom really sets themselves apart from the competition, the company made the decision to not reduce their inventory at the time around where the public and potential customers was emerging from quarantine. As long as Nordstrom was able to successfully move this inventory post-quarantine, the company may be in line for a much quicker recovery than its competition. Holiday shopping is around the corner, providing hope for a revenue upswing through the end of 2020. If Nordstrom is able to report a profit for the fourth quarter of 2020, JWN shares are positioned to soar in the short term. Outside of the uncertainty of the ongoing pandemic, the company has the potential to, at a minimum, double in stock price in the coming months. By continuing to employ the simple strategies learned in the 10X Academy channel, which include value investing, dollar cost averaging, and dividend reinvestment, you can create a low-risk dividend income flow that will appreciate over time and continue to pay income continuously. Through careful planning and diligent investment of capital, one can create a dividend income stream that can provide substantial income, eventually covering everyday expenditures and beyond. This video provided 3 dividend stocks that are still underappreciated as of October 2020 and can be added to any savvy investor's portfolio, providing great passive income flow opportunities. If you'd like to pick up some of these stocks now, make sure to use the Webull stock trading app, which provides a great vehicle to purchase stocks commission-free, thus providing a great way to create and grow a dividend income portfolio using the methods mentioned previously. And if you register now and make your first deposit, you can receive up to 30 free stocks that can be worth $1,600 each. So make sure you take advantage of this offer now. Be sure to check out the links in the description to get started on creating your very own passive income producing asset and start your path toward financial independence. Thank you for watching this video. If you enjoyed this video, don't forget to smash the like button. It will really help out the YouTube algorithm in bringing you more passive income and wealth creation strategy videos. And if you haven't done so already, be sure to subscribe to the 10X Academy. And don't forget to turn on the notification bell to be alerted on more passive income strategy videos. This is the 10X Academy.